Welcome to my weekend market recap, 16th October 2021. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my trading. They run as add-ons on the TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system. First, we have a look at the global markets, starting with Australian index, all ordinaries. In the weekly chart, price recovered from the swing low. This week's backdrop color turned bullish and the shape is also bullish. In the daily chart, price is still in a downtrend with lower high and lower low. It came to the watermark support level, displayed multiple bullish headwind possible reversal signals, and then recovered as we would expect from the bullish headwind signals. Now it is right at the trendline resistance. I will avoid taking any trade unless I see either price coming down from the trendline resistance, which is very possible, or if price can break out of the trendline resistance, then I may look for buying opportunities, though may not be in the index itself because the index is already somewhat above the recent swing low. If the breakout to the upside happens, I may look for buying opportunities in individual stocks instead of the index. Topics: Japanese market. Here we had a bearish headwind, and as we would expect, price dropped from there. It went below the lower boundary, at which point it was oversold, shown by the stretch band indicator. After being oversold, it displayed the bull release signal and then price recovered. On Friday, we have a very bullish shape candle and bullish color candle as well. You may say that it has a swing high and swing low. Therefore, we would expect price to continue to go up from here. Though we have a bullish flow candle and we may say we have higher high, higher low, the weekly backdrop color is still bearish. Shape is bullish, but the color is bearish. Therefore, if price goes up from here, instead of looking for buying opportunity in the index itself, I may look for buy setup in individual stocks. For short-term trading, topics may be assumed to be in an uptrend now. China market CSI 300 index. For a long time, it was in a sideways market, and that is continuing. right in the middle of the sideways range, that's a no trading area. I'll avoid taking any directional trade in the China market right now. Not only in the daily but in the weekly also it is in a sideways market. Next, UK's FTSE index. FTSE was also moving sideways inside a box. Now it is still inside the box in the daily chart. It is at the upper edge of the box. It is possible that price may come down from here, and it is also possible that price will break out to the upside, especially looking at the weekly chart where we see it has broken above the trendline resistance with a bullish backdrop color and bullish candle shape. So price may go either way from here. That is the situation we saw in the Australian market as well. And lastly, India's Nifty 50 index. That was the strongest of the global markets and that is continuing this week. Once again, Nifty 50 made a new all-time high. Very bullish shape weekly candle, bullish weekly color, and the daily candle is also bullish. For last 2 days, we have rapid up move with gap up open and further higher close. Very bullish looking chart. However, it is above the upper boundary, therefore I am not going to look for buying opportunities now, not at least in the index. There may be buying opportunities in industries that were weaker earlier and starting to go up now. Very bullish. That was a look at the global markets. Some of the markets are bullish, India and to a lesser extent Japanese market. Australian market still in a downtrend. China market moving sideways and UK market is also moving sideways. A mixed picture from the global markets. What about the USA market? Let's look at the market ETFs, starting with S&P 500 ETF SPY. In case of Australian market, we saw that after displaying the bullish headwind, price recovered, and we see the same situation in SPY also. At the swing low, it displayed bullish headwind signals and then price went up. It created a higher high, higher low. Therefore, for short-term trading, SPY is in a down in an uptrend. On Thursday, we had a bullish flow candle that was a go with flow long trade setup. And on Friday, price gapped up at the open and closed higher. Weekly candle is also very bullish. In the momentum signal, the alternate chart, we have the biggest up move of 3 months on Thursday. So that was a very bullish move. Biggest up move in 3 months, and it also had several other momentum signals like Mobo breakout from a squeeze with a kahuna, and what is this? Viable gap up also, BGU. So on Thursday we had plenty of momentum signals, Mobo breakout from a squeeze with a kahuna, Bible gap up and biggest up move of 3 months. That was a very bullish signal. So you could start to buy some stocks on Thursday. One thing that is missing though is if you look at the volume pattern, though price went up starting from Wednesday's close was bullish, price actually is going up but volume coming down from Wednesday to Thursday to Friday. Price move is very bullish, volume move is not. That is a concern. And we'll find out some other concerns later when we look at the market using other Q systems, not only Q charts but other systems. Price wise it is bullish, volume wise there is some concern. What about Nasdaq ETF QQQ? Nasdaq ETF came to the weekly trend line support and went up from there. And I shared a tweet right at the time price hit the trend line support and mentioned that we might keep an eye on that. That was very effective. The trend line support proved extremely valuable once again. Price went up sharply from the trend line support. Now the backdrop color is bullish in weekly and the shape is also very bullish. In the daily, price created higher high, higher low and went up. Similar to SPY, Thursday we had a bullish flow candle that was a go with flow long trade setup. Nasdaq ETF QQQ was weaker earlier. It had low thrust and very close to low jump. The jump signal at the lower end turned red, not magenta but red, and the thrust turned magenta. So it was very oversold. From that oversold condition, it recovered with a biggest up move of 3 months. That was there in SPY also. That happened on Thursday. It also had some momentum signals, Mobo breakout, Kahuna and a viable gap up. So there were plenty of momentum signals in both SPY and QQQ on Thursday. We could start to buy some stocks from there. However, once again, the volume is not high enough. So that's a reason to be cautious. What about Daya? Earlier, Daya was inside a range formed by trendline resistance and trendline support. At the swing low, it displayed a bullish headwind signal, then created higher low, higher high, and broke out of the sideways pattern, broke out of the trendline resistance on Friday with a gap up open. Thursday had a bullish flow. However, we would not buy Daya on Thursday because it closed right below the trendline resistance. On Friday, it had a gap up open and then it continued to go up with a trendline breakout. Therefore, on Friday, using fine-tuned chart, we could comfortably and confidently take a very low risk long trade in Daya. As of Friday's close, the weekly backdrop is bullish, weekly shape is bullish, and daily candle is also bullish. It has a breakout. If we look at the momentum signals on Thursday, it had biggest up move of not 3 months but 1 month, and there were many other momentum signals, Mobo breakout from a squeeze with a Kahuna and a BGU, viable gap up. So all these three market ETFs displayed plenty of buying signals, momentum signals, bullish signals, Q signals on Thursday. Thursday we could start to buy. Once again, the volume pattern is not encouraging. And lastly, if we look at the small cap ETF IWM, unlike Daya, it could not break out of the triangle pattern. On Friday, it gapped up at the open, then fell sharply, closed below the trendline resistance, so it is back in the sideways range. And if you look at the weekly chart, price opened on Friday right at the trendline resistance and reversed from there. So while we could take a confident low risk long trade using fine-tuned chart in Daya on Friday, we could do the opposite in IWM because it was reversing from weekly trendline resistance. Therefore, other than the small cap ETF IWM, the other market ETFs are bullish. However, volume patterns are not encouraging, and if we look at IWM's volume pattern, it is even less than the other ETFs. Wednesday, Thursday, Tuesday, even actually the whole week other than Friday, extremely low volume. On Friday, relatively higher volume. However, that is a red day, the down day. IWM actually came down on Friday by minus 0.31 percentage, whereas Daya went up by more than 1 percentage. So there was weakness, clear weakness in small caps and across the board weakness in terms of volume. Now let's look at the fine-tuned chart to see how we could take the long and short trades in Daya and IWM respectively. IWM price opened right near the weekly trendline resistance, then it created the early range high and early range low, started displaying multiple bearish indecision at the top, then on this candle it broke below the early range low decisively. So we could take a short trade right at the close of this yellow candle and put stop just above early range high. The stop was never hit, price came down, and even by the time it hit the pause line, more than risk distance was covered and a day trader could book at least partial profit and one could close the remaining position at the close of the day. So that gave a very profitable low risk short opportunity in IWM, and we would take the short trade as a gap short trade that also happened at weekly trendline resistance. And let's look at Daya. Daya had a breakout from trendline resistance. So price opened with a gap up. In the intraday chart we can see that, and that also cleared the trendline resistance in the daily chart. On this candle, price closed decisively above the early range high, so we could buy at the close of this candle, put stop just below early range low. Early range low, that stop was not hit, then price went up. We could book profit when price came to this pause line and close the entire trade by the close of the day. So we had two trades in market ETFs using Q guidelines. One was a short trade in IWM, one was a long trade in Daya. You could take it using ETFs, and If you are trading futures, you could take it in futures as well. Coming back to the weekly daily charts, other than IWM, all the other market ETFs are bullish, but volume is a concern. Let's see if we get more insight from the other Q systems. First, have a look at the very useful 1 month to 1 day sector, industry, stock, advanced decline, breadth. Every time we are seeing when the 1 and 2 day pictures become bullish, after that it starts to turn bearish. If you watched this picture, this multi-period advanced decline breadth on Friday at the open, near the open, then you would know that at the open everything was very bullish, and then later in the day it turned bearish, the 1 day period. If we look at stock advanced decline breadth, that is mixed. Industry breadth is also mixed. Sector wise, more sectors went down than went up. That is for the 1 day period, Friday period. 2 day, 5 day, 10 day, 1 month, those are all bullish. So in a longer term bullish move, Friday turned weak. We cannot say it is very bearish because in terms of stocks and industries it is mixed, but it is weaker compared to all the other longer term periods. So from here price may go either way, we are not sure. If it was more bearish on Friday, then we would be inclined to take more shorts than longs. However, in terms of stocks and industries, it is mixed. So we would say, at least I would say, price may move either way. Let's see if we get additional insight from other Q studies. Let's look at the bucket analysis. On Friday, 71% of S&P 1500 stocks closed above mid-Bollinger Band, and between Thursday and Friday there was hardly any change. Therefore, though sector is showing weakness, if we look at the stock level, the detail level, and even the industry level, and then look at the bucket analysis, it was a very neutral day on Friday. Looking at the bucket histogram, neither the uppermost bucket nor the lowermost bucket are at extreme levels. Extreme level would be around 30 to 40%, from where a reversal is likely, but it is not at extreme level. The buckets are showing bullish move both in the pie charts and also from the histogram. We see most of the bars, the bigger bars, are on the right hand side of the midpoint. So market is bullish. Friday shows some weakness, but that is at the sector level. At industry and stock level it is very mixed. It may go either way. We still don't have enough information to have a preferred trading direction, because the ETFs are also mixed between large cap, mid cap, and small caps. Therefore, we further look at Finder Insight, technical breadth. The balance between bearish and bullish signals, first using the weekly interval. Weekly is very bullish. 78% of all signals bullish. Strength signals 76% bullish. Trend continuation 83%. Trend reversal is also bullish, 75%. So all across the four categories, the weekly period technical breadth is bullish. There is no doubt about that. Is there any warning from the bearish headwind percentage in the weekly interval? No, it is at 0.4% level, and alert will be at 1% or higher level. That is the weekly technical breadth bullish, and Friday's picture, that is mixed. If we look at all signals, this is find the daily interval, Friday's picture, all signals mixed. Trend continuation also mixed. One concern is strength signals are very bullish, however reversals are very bearish. 90% of strength signals are bullish and 94% of reversal signals are bearish, and they are comparable. Gap ups with reversals are comparable. So strength bullish, reversal bearish, together they are becoming bearish. That is a concern. At the same time, if I look at the price level from where bullish signals are coming, they are still mostly from the mid price level, or you may say it is balanced between mid and high price level. It will be more overbought when most of the bullish signals come from the green territory, that is price extreme high. That has not happened yet. And if you looked at it at the close of Thursday, then it was much less green than this. It was much more yellow than what we are seeing now. So Thursday would have been the perfect day to start to buy some stocks. Friday would be little bit overbought, but not overbought yet, neither from the bucket analysis and not nor from the price level from where bullish signals are coming. It is still not overbought. In a overbought market, most of the bullish signals would come from green territory. That is not true yet. So daily picture is mixed, weekly is bullish. We still don't have a preferred trading direction. We might take trades in either direction at the close of Friday. Let's see if market breadth studies using Q Global gives us additional insight. First, a look at the detailed market internals using Nasdaq and NYSE market breadth. Percentage of stocks above 50 MA. For Nasdaq, it is now in an uptrend above the average line. It's around 41% level, still below the 50% level. However, it came down and now it is starting to go up. For NYSE, it is at a higher level, around 50% level. So Nasdaq percentage of stocks above 50-day MA is around 41% level, but NYSE is around 50% level. So NYSE once again became stronger than Nasdaq. NYSE also in an uptrend for this percentage of stocks above 50 MA yellow line, in an uptrend higher high higher low and above the average line and at the midpoint. So that is showing bullishness, which was not true in recent weeks. In recent weeks, for quite a long time, the yellow line was in a downtrend, and only now it has broken the downtrend and it is moving up. So that is also showing a bullish picture. From here, if we had to pick a direction, we would pick the long direction for our trades. If we look at the 3-month new high low, for some time it was in the lower half of the midline, and from Wednesday, Thursday, Friday it went up. So that is also a bullish signal. From the lower half, being in the lower half for a long time, after being in the lower half for a long time, it broke out to the upper half, not yet at the extreme level. So it it may go higher. So from the Nasdaq NYSE market breadth, we see it is not overbought yet, it is in an uptrend, so we may be more inclined to buy. And if I look at the market breadth total view, that combines the insight not only from the two exchanges but from the four major indices. Again, a look at the 50-day MA starting to go up now. The downtrend is broken, higher high, higher low, above the average line, and it is very close to the 50% midpoint. So this yellow line is also telling us to be bullish. The 3-month new high low was in the lower half for a long time. Wednesday, Thursday, Friday, it went up. We in fact had an accumulation day on Thursday with a count of 2, and the counts came from Nasdaq 100 and Dow Jones Industrials. So for Friday, we see very bullish move in the market. Thursday also bullish move. And the bullish move, now we know from the internals, it was more from Nasdaq 100 and Dow Jones Industrials, at least in terms of accumulation count. That gave accumulation count of through 2 on Thursday, and that showed that the larger cap stocks were stronger. Dow Jones Industrials has only 30 stocks, Nasdaq 100 about 100 stocks. So it was strong on Thursday, but it was more because of larger cap stocks. Let's see if that is confirmed from mega cap top 20. Yes, mega cap top 20, the custom index in Q global market breadth. Earlier it was in a downtrend, and now it has created higher high, higher low. It has gone up, and the relative performance line is showing that mega caps are doing better now. Thursday we had a bullish candle color after an indecisive doji candle on Wednesday. So there is a concept that after a doji indecision candle at a swing low after a pullback, if we have a bullish candle, then that is a time to start buying stocks. So we see now that on Thursday, whether in terms of market ETFs or in terms of Q global market breadth or mega cap top 20, we had buying opportunities on Thursday. That was the best day we see that we could buy stocks. Friday would have been a bit too late, one day too late. Thursday was the best time. And after looking at the market from all these angles, I am inclined to buy, except that the volume pattern in the market ETFs is not encouraging, and the breadth insight from Q edge on Friday was not encouraging either. Finder insight was also concerning because reversals were very high, 90% plus reversal signals were bearish, not bullish reversal. So looking at that, we could do one of two things. We could wait for the market to give us clearer signals, or we could look for both buying opportunities as well as shorting opportunities and get ready with some stocks depending on how the market is moving on Monday, Tuesday. We could execute the trades. If the market is going up, we could execute the long trades. If market is going down, we could execute the short trades. So let's do that. Let's try to find some stocks. Now I shared a stock on my website on Friday. Let's have a look at that first. Sagannandi.com. I shared the ideas under this category, 360 degrees trading techniques and ideas. This was the post. This stock has many This stock has many bullish Q daily signals and the weekly is also very bullish. That was on RPRX. These are the snapshots I shared. That was on Friday 11 a.m. Eastern Standard Time using real-time analysis. The pharmaceuticals industry was up and the pace columns showed that it was accelerating. It was not one of the best performing industries on Friday. 15th October was Friday. Not one of the best performing industries, however, the industry was going up and it was starting to accelerate. And I found this stock RPRX. It was steadily going up, percentage change for real time, 1 day, that is Thursday, 2 days, 5 days, 10 days, all were positive. Valuation was medium, yellow color. However, it has high earnings growth. So it was a 1-star buying candidate and funds were buying. Insiders are also buying. Analysts are bullish. 60% of peer stocks in the pharmaceuticals industry, they were up. And if we look at the year-on-year earnings growth and revenue growth, both were sharply tilting up. So fundamentals allowed us to buy 1-star buying candidate. And then I looked at the technicals, very encouraging technicals. In the weekly, price retested the watermark support, created false downside breakout, and it came with the bullish headwind signal, bullish pressure reversal, bull release. So many reversal signals at the watermark support level at the double bottom with a backdrop color that is bullish, candle shape very bullish. In the daily also it came to the watermark support, created false upside breakout. We would have waited for this trendline resistance to be broken. That happened on Thursday. And remember I showed earlier that Thursday was the best day to start buying some stocks. You could take the trade on Thursday itself using real-time charts, and if you are analyzing charts at the end of the day, then you could get ready and buy the stock on Friday. Stock went up sharply on Friday also. So that was a trade you could take on Thursday itself. Another reason that we would be interested to buy the stock was that it was at very low jump thrust level. In fact, if you look back, it was at low jump and low thrust, and from there it broke the trendline resistance. So Thursday was the perfect day to buy the stocks. On Thursday, it also gave us biggest up move of 1 month, 2 kahunas in a row from a squeeze, and there was a Mobo breakout earlier. RPRX looking very bullish. When you look at the weekly chart, this is the first bullish shape, bullish color candle since this top. After this top, if you look back, there has not been a single candle in the weekly chart that is bullish both in color and shape. So this is the first bullish candle after a long time with a bullish headwind as well. So it looked pretty bullish and I took a long trade. I don't remember whether I took it on Thursday or Friday morning, either near Thursday's close or Friday morning. One of those times I took a long position in RPRX, looking very bullish. On the other hand, if we look at this stock CF, this is a stock I would not buy. Just now I showed you a stock that came down and started to go up. That's the kind of stock I like to buy because it is also fundamentally strong and in an improving industry, accelerating industry. And see this stock almost opposite. It came here in the weekly chart after an uptrend, displayed bearish headwind signals and price dropped. Then price is retesting the watermark level, watermark resistance created by the bearish headwinds, broke above that bearish indecision at the top, and this week's candle shape is bearish, though color is still bullish and price is still above the watermark resistance. If price could come below the watermark resistance, that would be even more bearish because that would create a false upside breakout. Still, it is looking weak in the weekly because it displayed indecision at the top and then a bearish shape candle closing at the lowest price of the week. And that was happening when market ETFs other than IWM all were going up, closing with very bullish shape candles, and CF closed with a very bearish shape candle. In the daily, it displayed a bearish headwind. Price tried to go above the watermark created by the bearish headwind, displayed bearish indecision at the top. Right after that, it displayed bear release and closed below the watermark resistance, completing the false upside breakout. And now we have a bearish flow on Friday with a very bearish shape candle. And I mentioned earlier that after the bearish headwind, the first bearish flow tends to be an attractive location to short. Therefore, if you kept an eye on CF using intraday charts, you could probably take a short trade in CF on Friday itself. If not, you may keep an eye on the stock. The market is not bearish at all, but if the stock continues to go down, you may have a low risk shorting opportunity. And if you look at the momentum charts, we also see other reason for shorting, that is the high jump. It is at extremely high level from where a pullback is not unreasonable. And we had the biggest up move of 3 months at high jump. When biggest up move of 3 months happen at price extreme low, I like to buy. But when that happens at price extreme high, and it was at price extreme high at that time, biggest up move at 3 months with high jump, and then came these reversal signals with bearish flow. So this is a stock I would not certainly buy. We have BSAR reversal to the bearish side, a bearish pocket pivot, and biggest down move of 1 month. Now if we look at the intraday charts, if you were watching CF on Friday, then you would notice it created the early range high, early range low on this candle. This is 5-minute interval. I use 5-minute interval in the morning session. It closed decisively below early range low. So you could short right at this level, putting stop just above early range high. The stop was never hit. When price came to this pause level, you could book partial profit and you could close the entire trade at the close of the day. And sometimes I use the technique of using stocks to short the stock. At the close of the day, book profit in my stock short position and open with part of the profit a bearish options trade. As of Friday's close, I am holding a short position in CF using options. So I am taking a few trades in the long direction few trades in the short direction. Shorts are in overbought stocks at high jump at price extreme high with bearish headwind and bearish flow, and long trades in stocks that are at price extreme low but breaking to the upside like RPRX. Now let's try to find out few more breakout trades, breakouts to the upside as well as breakdown to the downside if we can find some. I regularly share such example trades using live analysis before knowing the result, and they turn out quite well. Overall, they turn out quite well. You might have seen that if you are following the forum post, my website post, and let's see using live system how we can identify some such trades. Back to Finder, let's look for bullish setups. Let's look for bullish breakouts. I'm flagging the breakouts. 89 breakouts. They are breaking out above trendline resistance. Let me add some momentum signal to the breakouts. Look for MOBO breakout from a squeeze with a kahuna. Left with 8 symbols. Let's look at their fundamentals. Retrieving data from Refinitiv to calculate the scorecard. Scorecard is calculated. Let's look at the stocks. Look for at least one star that is either strong in terms of valuation or strong in terms of earnings growth. Either in terms of earnings growth in the last quarter or valuation, one star candidate, and 7 stocks are found. These are all breakouts to the upside with MOBO breakout from a squeeze with a kahuna. These are very strong breakout signals and fundamentally strong stocks. Now let me check their industries as well. So I am still not opening the charts. I could open the charts, demonstrating different ways you may achieve your final workflow, 360 degrees workflow. Aligning technical, fundamental, industry strength together. Which one you do first is up to you. You are able to achieve all of them, all the different combinations into a final 360 degrees workflow. So I see these industries are stronger, even managed healthcare, where I am choosing managed healthcare also because I see it is showing acceleration. In fact, all the 5 higher this other than the lowest one, the lower one, packaged foods and meats, 1, 2, 3, 4, 5 industries are showing either strength in the recent period from the relative score or they are accelerating. So I am willing to buy in any of these 5 industries. Let me look up the stocks only from these industries. One star candidate. So I am left with 6 stocks. Now I will look at their technical charts. Let me open them using Q Global or Metastock. I could use Q Elite also. Now I am applying the unambiguous checklist conditions to find if we have a setup. We have a breakout. These are breakout trades. Now I have to see if there are risks in the trades. The first stock is Caterpillar, very strong, very well known stock, but strong stocks do fall down like Caterpillar did, and it displayed bull release, bullish headwind, bull release. On Friday, it broke out of the trendline resistance. That's why Finder could identify it as a breakout trade. However, there is another trendline resistance nearby, so I will avoid buying Caterpillar. Let's see if I find a better breakout trade. Visa, another strong company, but see once again how the bearish headwind could catch the very top. Now it broke out above one trendline resistance but just like Caterpillar, it has another trend line resistance, so I'm not going to buy. So now I see that my concern earlier when I was doing the market level analysis, that though the ETFs are going up, volume is not enough, Finder picture has some concern, and Finder technical breadth had some concern, Q edge, sector industry advanced decline breadth had some concern. That concern is reflecting truly in the individual stocks. We have breakouts, but they are not giving buy setups because they have other resistances nearby. That was true for Caterpillar Visa. Let's continue. Ali Financial, ALLY. It has a breakout, however, it has an upper tail. So I may keep an eye on the stock, but I wouldn't buy it on Friday. On Monday, if it starts to go up, then I may consider buying the stock using fine-tune chart. But as of Friday's close, we still didn't find a breakout. I didn't find one that I would like to buy. Continuing, CNC. This has a better breakout. Decisive break above the trend line resistance out of the sideways range, and there is no other trend line resistance nearby. The next watermark resistance is far away. It in fact closed above the yellow direction line as well. So we have several bullish signals. We have bullish pressure. I'll come back to this stock. Do we have other stocks left? Yes. BSBR. This also has a clean breakout, decisive breakout with bullish pressure. The next trend line resistance is reasonable distance away. It's reversing from a longer term watermark support, you may say triple bottom. We have a squeeze coming out of the squeeze with bullish pressure, in fact bullish flow also. So we are allowed to buy this kind of trades using the concept of buying a stock at the lower edge of a sideways move or lower edge of triple bottom, and it was in a squeeze as well. Clear breakout. So I'll come back to this stock also using 3 chart template. Let's see if we have other stocks. Wells Fargo, it did break out of one trend line resistance, however there are few more nearby. So this is not a buy setup for Q traders. Close that. So I am left with two stocks, CNC and BSBR. Let's look at them using the 3 chart templates. All the Q and momentum signals will be available. Well, now also it is looking pretty good using 3 chart template. BSBR. In the weekly, we have a double bottom. We have a bull release signal, bullish indecision at the bottom, then a bullish shape closer. In the weekly, next trend line resistance is enough distance away. In the daily, we saw already it has a double triple bottom, reversal from longer term as well as shorter term watermark watermark support with bullish indecision at the bottom. Friday we have a bullish flow, bullish breakout with pressure, and as I looked for in founder, Mobo breakout from a squeeze with Kahuna. On top of that, we have one pocket pivot and biggest up move in 3 months after price being near low jump, low thrust. Not magenta yet, but very close to being magenta, red color, low jump, low thrust, close to that. So we have even more bullish momentum signals. In fact, Bongo turned green and we have PSAR reversal. So plenty of momentum signals, breakout, and it is a buy at lower edge of a sideways move or buy at double bottom with clear breakout, lots of momentum signals. So this is a possible buy. BSBR, we already know it's fundamentally strong. We already know it's Industry is also strong. Technically, it has a buy setup. Let's look at the other stock, CNC, Centin. We look at that using 3 chart template. Very nice trend line support in the weekly. Doji candle followed by a bullish shape candle, followed by another bullish shape candle. In the daily, trend line support and trend line resistance, breakout above trend line resistance with bullish pressure. And as we also search, we didn't only search for breakout from Finder, we search for breakout with Mobo breakout from a squeeze with Kahuna. Other than that, we also have a pocket pivot and PSA reversal on Thursday. Bongo is green. So CNC is also giving a low risk buying opportunity. We have another 5 minutes. Let's look at some bearish breakouts now, breakdowns. Again, go back to Finder. From daily Finder, I am looking for bearish signals, 53 bearish breakouts, but I also want to look for bearish momentum signals. So let me do that. These are trend line breakdown, and I'm going to associate the breakdowns with Mobo breakout from a squeeze with a Kahuna. Lesson number 5. Let's look at their fundamentals. I would like to short weak fundamental stocks, but that is not a requirement. I am allowed to short in Q technique at higher price level in weak industries, even if fundamentals are not weak. Having said that, no harm checking out their fundamentals. I see some overvalued stocks, some stocks with negative earnings growth. So I am able to short all of them. Let's check their industries. I would avoid shorting the last industry, internet and direct marketing retail. That's looking very bullish in relative score. Let's look at the actual percentage move. Yes, the actual percentage move on Friday is also bullish. It's bullish for some days. So I will not like to short a stock in internet and direct marketing retail. Q Techniques allows me to short a stock even if it is fundamentally strong. If it is at higher price level, that is allowed, but we are not allowed to short strong industries. So I am able to short in the other 3 industries. Let's look at the stocks in those industries again. I'm left with 4 stocks now. It's time to look at their charts. HSIC did break below one trend line support. However, there are many other trend line supports nearby, moving sideways still, therefore not going to short now. Next one, ALEC broke below one support, but there are other supports nearby, not going to short this one also. Next one, ALDX broke below the trend line support, broke out of the sideways range, broke out of the triangle to the downside. However, the breakdown is not very convincing, so I wouldn't short it on Friday. I would look at it on Monday, and if it is continuing to go down, I would not mind taking a short trade using fine-tune chart. But I'll come back to this, look at it using 3 chart template. I have one more stock, ADTN. This also has a nice breakdown with a bearish flow, bearish shape candle. So I'll come back to this also using 3 chart template. So I'm left with these two stocks. Let's look at them using 3 chart template. ALDX. The weekly shape is bearish. Daily breakdown. In fact, daily has a reversal candle on Friday. That is encouraging. Also bearish flow. It has a possible go with flow short setup. Bongo turned red, and we looked for Mobo breakout from a squeeze with a kahuna that is there, but it is already near low jump. Low jump stocks can still go down from the weekly. I see it has potential to go down. So I would not short it on Friday's close, but on Monday if it continues to go down, there is a possible short trade using fine-tuned chart. Let's look at the other stock, ADTN. Look at it using the 3 chart template. This is looking weaker. Yes, it is also near, not at, but near low jump. However, the weekly is looking quite bearish. The other stock had weekly backdrop yellow, but this weekly backdrop is magenta, bearish, breaking down with bearish shape below weekly support, daily support broken with a very bearish shape candle with a reversal candle once again. And we already know it had Mobo breakout, in this case breakdown from a squeeze with a kahuna plus a bearish pocket pivot, and it broke down with higher volume. I didn't read it out, but I noticed the other stock didn't have a high volume breakdown, but this stock has. So ADTN looks like a better shorting candidate. And if we look at its fundamentals again, let's look at the fundamentals using the home page, one page scorecard. I am allowed to short even if fundamentals are not weak, but let's check it out. Yes, fundamentals allow me to short. It is weak, overvalued stock, high earnings growth but slowing earnings growth. In any case, it is overvalued, so it allows me to short, and the percentage move over 10-day, 5-day, 2-day, 1-day, and real time. Everything is bearish. There is no real time 1-day. 1-day real time was same. So it is gradually coming down. Industry in itself is weak. 75% of peer stocks went down on Friday, and that was a day when, other than IWM, all the other market ETFs were pretty bullish. So this industry, communications equipment and networking industry, was weak in itself. And if I look at the QH relative scorecard once more, that is also weak. Not only weak in terms of relative score, it is decelerating as well. So we could look for some bullish trades as well as bearish trades based on my market view that allows me to take both trades, and I may get ready with some stocks in both direction and execute them depending on how the market is moving next week. And as I explained, I have currently bullish positions like in RPRX. I think I timed it very well. The breakout happened on Thursday, and in CF, I think I timed it very well. Doesn't mean that every trade is going to be guaranteed profitable trade, but I think in terms of risk management and entry precision, I timed both of these trades once again very well. And that is not difficult if you and I are using Q systems. That is all for today. Thanks a lot for joining. I look forward to seeing you in our next session. I will not take the Wednesday's regular webinar because I am busy with the master classes. So the regular public webinar will be again next weekend. And for those of you who registered for the master classes, I'll send you a notification on the next class soon that will be on QH. Thanks once again. Have a great weekend. And as always, no reason not to do so. Trade profitably. Thank you.